we'll be moving on to the next session. So welcome back, everyone. I hope you've had a good, refreshing break with a cup of tea or coffee you've had. For the next session is Powering Growth Through Strong Credit Infrastructure. And for that, we have our speaker, Mr. Pushpike Jayasundara, General Manager of the Credit Information Bureau of Sri Lanka. He will discuss the importance of strengthening credit systems to support growth and investment in Sri Lanka. Let's all offer a round of applause for Mr. Pushpike Jayasundara as he comes onto the stage.
So before I comment my presentation, let me post a question to you all. The question will be, CRIB, Credit Information Bureau of Sri Lanka. Does it ring a bell? So, what are your thoughts when you hear CRIB? So I'm not going to expect an answer from the audience, because I know what the answer will be from the audience, because it's something that I've experienced day in and day out. So let's not go there looking for the answer. So keeping the question as it is, let me proceed with my presentations. And later, I will come back to my question. So let me first take you through the objectives of CRIB, Credit Information Bureau of Sri Lanka. So our fundamental objectives of the Bureau are enhance credit flow, increase credit grantings to the economy, credit inclusivity. What do you mean by credit inclusivity? The access to credit. We are in the forefront in developing access to credit to our general public, to see that the economy will ignite with its activities through credit, and also mitigate information asymmetry. So these are the three key objectives of Credit Information Bureau. I'm sure most of you all are unaware of this. So number one, enhance credit granting and credit flow to the economy. Number two, credit inclusivity. Number three, mitigate information asymmetry. So I will go one by one. Leaving the objectives as it is, let me touch upon the scope of CRIB. So what do we do? Credit Information Bureau of Sri Lanka. What do we do? What do we engage at? We collect credit information or credit information related data. We collate it and disseminate it in different forms, in different tools for the financial sector to make decisions. So this is our scope in order to meet the objectives that I define. Also at the same time, we provide right to access your own credit report for every citizen in this country. I'm sure most of you all are unaware of this factor. We don't know whether we could access our credit report, credit score, and check the standing, the financial standing of yourself or your institute that you're working for. So we have provided that online, where at any given time you can access our website and obtain your credit report, credit score to understand your credit worthiness. For 3.5 decades, CRIB has been one of the pillars of the sound financial infrastructure of the country. So if I go back to its origins, that was in 1990 through an act. How was CRIB born Or how was it formulated? Does anyone know? So let me go back and shred your thoughts on this. In late 80s, there had been a financial crisis where the financial system was challenged through increased non-performing loans or non-performing assets. Since the non-performing assets were increased, the banks and the financial companies' focus was not on credit dissemination, but to tackle the problem at hand, where their focus was to have the control over the non-performing assets. So in late 80s, it was a huge challenge at that time to adjust the monetary policies to see that the credit flow to the economy was not as the requirement of the Central Bank of Sri Lanka. So at that time, the officials of Central Bank and the top officials of the Finance Ministry tried to find a solution for this. And as a result of intense research and looking at overseas models, the Credit Information Bureau was established in 1990 under an act, number 8 of 1990, and subsequently amended twice. So this is the very purpose and the beginning of Credit Information Bureau. So as I said, this bureau was established to face or to remedy critical challenges that was faced in late 80s. 3.5 decades have passed. Today, we are one of the strongest forces in the financial sector in the 3 objectives that I stated. So let me touch upon one of the key factors, information asymmetry. What is information asymmetry in credit markets? The information gap that you find between the borrower and the lender. So let me explain with a very simple example how this works. Assume that I am doing my groceries in a supermarket. And while I'm selecting my groceries, a friend of mine, a close friend of mine approaches me and asks a loan from me. So what is the first question that will come to my mind? The first question that will come to my mind is, am I going to give this loan to him, or am I going to reject this request? Now I said he is a friend of mine. He's a friend of mine for a long period of time. So since he's a friend of mine, that I have the required information of him. What are the information I have? I know his credentials. I know his whereabouts. I know his income. I know his integrity. How do I know his integrity? Because during the past, whatever he has taken, he has returned. He has maintained a proper discipline. So when I have this information, there is no hesitation for me to offer this loan. So first thing that I would do is, yes, since I have the information, I will say, I have no problem of offering you this loan. On the contrary, say when I'm doing my groceries, a stranger comes to me and asks, or first introduce himself. I am so and so. I'm residing in this place. My income is this much. And giving some information, and he's asking me a loan. Now, will I consider the loan? No. Why? He gave his information to me. He said who he is. I have no confirmation of this information. I have no visibility of this information. So there is an information gap that has been created. What is the gap? There is a request. I can give the loan, but I don't have any confirmation on this information that he gave. So this information gap in the credit market is identified as credit information asymmetric. So this is the occurrence that happens day in and day out in the banking and finance sector. Always a stranger comes walking to a bank, asks a loan, I introduces himself, provides his income, no confirmation, and this information gap, due to this information gap, loans are being rejected, certain loans are being given. So what is the CRIB's role in this whole equation? What we do is we mitigate or minimize this information gap through a process. The process that I said. We collect credit information, we process it, and we provide it with integrity, with value for the financial systems and the policymakers to make decisions. So this is the importance of CRIB. So let me go back to that question that I asked from the audience. What did I ask? When I say CRIB, what does it ring at the back of your mind? These are the guys who prevent us taking loans. Am I right? Some of the policymakers at some stages used to say to close down CRIB. Now, does it coincide with what I described? What are our objectives? To increase the flow of credit to the society. The importance of credit is identified in the economics. How important the credit is to drive the economic activities. Economic activities consist of transactions. Transactions are divided into two. Cash transactions, credit transactions. If the credit transactions are not there, how can an economy will prosper? So if Credit Information Bureau is closed down, what will happen? So the objectives of the Credit Information Bureau will die down. So the information that I gave was to give a clarification to the audience of the dark picture that has been created outside due to misconception over a long period of time. I would say 3.5 decades. So I wish that the audience got an idea, the objectives, the scope of the Credit Information Bureau of Sri Lanka. So let me touch upon some of the services that we provide. We provide a credit profile to organizations, institutions, and individuals. So how do you basically provide the credit profile? Through a collection of credit information or credit-related information. So we provide a detailed report. Without any decisions, we provide a detailed report for the financial sector, the policymakers, and the regulators to make decisions. We do not classify customers into various categories. It is a decision of the person who takes the report from us. Thereafter, we provide a credit score, a national credit score, as a risk management tool. Now, when I say risk management tool, I'm sure most of you all will not see the value of it. But I'll take you through my presentation and show how much of a value the credit score or the CRIB score will give for the development of the economy. I'm sure in the morning session, some of the speakers touch upon this. So our CRIB score is an internationally accepted product where we have partnered with an international agency where their presence is in 60 countries. So we have localized the credit score and we have introduced the score for the benefit of the country. Other than the credit score, we have introduced portfolio management tools for the financial sector. Why do we need portfolio management tools? Every bank, every finance company has huge asset base that need to be managed. They cannot be managed manually. They have to be managed based on the data that is available. So with the credit information data that we collect on monthly basis through extensive processes, when we collect credit data, we take it through 600 validation rules. We take it through an audit process to see the integrity of data, to see the governance is maintained in those data, and the data security. So through this process only we collect this data and see that it is being provided in different forms. So portfolio management tool, monitoring and alerts, is an advanced tool that we have introduced to the banking sector to alert them on various indicators in the portfolio. Other than that, we are heavily into data analytics. We collect various types of data, we analyze it, and in analytical forms, we give to the required parties for decision making on aggregate basis. Then we have digitalized. During the last 1 year, we have digitalized all our services. Any person can obtain their credit report by click of a button and maintain your credit score, your credit profile as per your requirement. So you can't blame the banking system or the finance system for not being able to get a loan. You have been empowered to manage your own credit profile. Also, we are at the moment engaged in developing a specific score for MSMEs. I'm sure the audience will know today the MSME, empowering the MSMEs is the focus of the country. From today, I think looking at the development of many areas, empowering the MSMEs is one of the key requirements identified. So we are in the forefront in developing a specific MSME score. Now when I say specific MSME score, I will just enlighten you that we have roughly around 19 million adult population out of 23 million. Out of the adult population, the Credit Bureau has roughly around 9 million data. So that's about how much? 50%? That's about 50%. So 50% of our population, adult population who can work, we have data, we have credit profiles. The balance, what has happened to the balance? The balance, we don't have the data. Why? The credit inclusivity, the second objective of CRIP. The 50% of population has no access to credit. Now, when the policies are being made, these are the data that need to be looked at. How do we basically get them in or get them into creating a credit profile for them to have access for credit? So this is where we are in. We are looking at non-traditional data, capturing non-traditional data. What is non-traditional data? We are capturing utilities, water, electricity, telephones, telcos we call it, mobile and land phone data, insurance, And also we are looking at capturing e-commerce data. So capturing this data will give them a credit profile, a profile for the non-bankable 50% that is out there searching for credit and who's becoming a prey for unauthorized credit lenders at high rate. So what we do in policy making is seeing that this is a need of the country and doing this developing of MSME scores. Also, in capturing non-traditional data, we have already gone 90% of this journey, where Ceylon Electricity Board, LECO, Water Board has already come on board providing data with us. Insurance companies have already discussed matters to share their databases with us, with CRIB. We will be approaching the telcos. E-commerce platforms are discussing with us to share their data. So all this data will provide the required insights for decision making on these sectors. So let me dive into the database that we have. I'm presenting only the aggregate data that we have in order to have an understanding of the credit ecosystem of Sri Lanka at present. So all this data, aggregates data, that is up to December 2024. And you will see that we have on average granted 1.2 trillion loans per month on average. The blue line shows the total amount of granting, which shows an improvement by December, gone up to 1.4 trillion. The red line shows the number of contracts, which is around roughly 700,000. So we have a ticket size on average of 1.8 million, which is healthy. So if you see the last 3 months, the ecosystem functions as per the policies driven by the monetary board, as per the expectations. At the same time, if you look at the portfolio-wise, we have a 13 trillion credit portfolio in our database. So we have seen a steady growth from 2023-24. We have seen a downward trend, and from there it has picked up, and these numbers basically tallies with the growth that we have marked on other economic activities. Distribution of credit. Now when you analyze the 1.2 trillion credit that is being granted, 62% of the credit is being granted to corporate entities, companies, and only 38% is granted for individuals. Does it tell a fascinating story? Now let me enlighten you on one more factor. As I said, we have almost 9 million data. A few minutes ago, I said we have an adult population. Out of that, 50% we have information. That is somewhere around 9 million. Out of the 9 million, can you guess how many corporates have been with us in having credit profiles? A wild guess? 10%? 20%? Only 5%. Out of 9 trillion, we have 450 companies registered in the CRIB database. And these 450 companies, there is 62% credit gone. Does it tell a story? Why does this happen? This is because information asymmetric available in the market. The banks and the finance sector cannot be blamed. They don't see the required information in the market for them to provide the required loans for the development of the country. Instead, what they do is they provide facilities for the information that they only can see. This is where we need to adjust our policies. So this tells a beautiful story where 62% of the credit is being distributed among 5% of the entire active numbers in our portfolio. So let me go back to this presentation where the analytics show 2022, 2023, and 2024 quarter-wise growth in terms of corporates and individuals. So what is marked in red circle is the economic collapse or the downturn of the economy. And you could see the line charts are dipping the individuals as well as the corporates during 2022. And slowly it's been picked up. And what you can see here is that the blue line is overtaking or accelerating more than the credit flow for the individuals. Now, before the economic collapse, it was the other way. And later on, the corporates have overtaken the individuals. So the story behind this is that the most affected, I think from morning that we were discussing on this matter, the most affected by the pandemic and the economic downturn are the marginalized people in the country. The people I said that who are unable to come to banks, who are unable to, or who doesn't have the access to credit, are the most affected. So can we blame the banks and the financial sector for this? No, because they don't have the visibility of data or the integrity of these clients for them to make informed decisions on risk and credit underwriting. So instead, what do? They overload the same client over and over again. So it's been shown in these drafts very clearly. Again, in this chart, you can see the individuals are at the bottom, growing but not up to the sufficient level. But the institutions who are taking credit basically shows a surge in 22 to 23, and then a steady growth subsequently. Tells the same story. Out of the credit that we have granted, 92% is on collateralized. So we are an economy that is totally dependent on collateralized lending. If you have collateral, you would be able to take a loan. If you don't have collateral, there is no loan for you. So is this good? Have we thought about this? So this is where we need to set our thoughts and strategies towards this. So this chart directly shows 92% of credit granted during this period is on fully collateralized, and unsecured is only 7.93% during this period. The collateralized outstanding tells the same story, which I don't want to go into it. So here we can basically understand something. What can we understand? Now, in the morning, the Deputy Governor, in his presentation, very clearly outlined and answered a question. How do we ignite the SMEs? He said, one of the key things, what he said was, if you don't have collateralized, in other countries, internationally, they depend on credit scores. So what is a credit score? It's a powerful risk management tool. Again, I'm telling the same word, which has no meaning if you are unable to understand the depth of it. So let me basically explain. This is a 3-digit number that is taken out from more than 20 data points, taken out, and understanding the correlationships, behavioral patterns, and applying statistical models. And you take a score which will basically give you an indication of the person or the entity's risk factor that will determine the probability of default for the next 12 months. So this is a powerful tool that will determine the probability of default for the next 12 months. So most countries, most developed countries or developing countries today relies heavily on credit scores instead of collateralized lending. This depends on the volume of credit. Now, if you look at the quantum of credit, if it's retail credit that is you're looking at, the Credit Information Bureau highly encourages you to focus on credit scores, the national credit score that we have introduced. So we have achieved, during the last 1 year, from 22% of using credit scores to 62% through our own effort, promoting and educating the financial sector on this matter. So this particular graph will show on the bottom axis, A, B, C, D, and E are the risk grades. So if you have A grade risk score, you are in the green zone, where you would be able to get a credit facility. And if you are having a E grade, where your credit profiles shows a high risk. But understand, these are not static figures. These are dynamic numbers, where within the next 3 months, if you have a negative score, you would be able to make it positive. That is why we say to obtain your credit score and the credit report frequently to understand and manage your credit standing. So if your credit score is E, you will see the NPL ratio has gone up. Now this is actually from actual data. We have basically gathered this chart. When the score is at low risk, your NPLs are extremely low. And when the risk grade deteriorates from A to B to E, the chart shows that NPS levels are extremely high. So these can be checked by another product, what we provide to banks and finance companies under retrospective reporting, where retrospectively you can get scores on a particular cutoff date and check with your portfolio actual figures whether it shows the accuracy. So the accuracy that we have identified in the CRIB score is approximately around 90 to 92%. So what we promote at this moment of time on collateralized lending is that the banking and finance sector should rely on credit scores, on their credit due diligence or credit underwriting instead of fully collateralized requirements. Moving forward, the chart shows up to December, the loan amounts that we have granted. Now the green bar chart shows 8 trillion loans that has been granted. And October, November, December, you will see the leasing has dropped. Overdrafts have gone up. And at the same time, the trade finance has increased. Now in this green bar chart, you will find 70% is been granted for again companies, institutions. And only 12% is granted for SMEs out of all the loan portfolio. So if you see these behavioral patterns, it is the same thing that we see. Due to lack of credit information, due to lack of bad credit practices, the distribution of credit is not up to the level that is expected, that will ignite the growth of the country. Year 2024, again, I'm just analyzing the percentages of product-wise. You will see trade finance has seen a massive growth. 26.83% growth out of the loans that we have granted. Secondly, the consumer loans, gold loans, pawning, factoring has increased during the year. Overdrafts have increased. However, leasing and credit cards have seen a marginal increase during this period. Sector-wise, you will see the commercial sector has shown the highest growth, which is about 15.5%. The industrial sector, the second highest growth, has shown 14%. The financial sector, 12%, which is the third highest growth. Then agriculture, consumption, tourism has seen marginal growth during the last 3 months of 2025. Sorry, 2024. So let me jump into, with this information, let me jump into the non-performing assets. The moment you hear crib, first thing that come to your mind is basically we are the guys who blacklist people and prevent granting facilities to others, right? So I'm sure all of you all, the takeaway from this whole presentation will be that you will be cleared that we are the guys who promote credit. So in this, I will basically tell you that out of 13 trillion portfolio, we have above 90%, 12% only. 12%. The rest are below 90 days. In other terms, we have a culture, we have a society that is well disciplined. We have a society who knows how to manage their credit. But that 12% basically makes a big sound out there. And we also basically get carried away with this 12%. Now, out of this 12%, we have restructured almost 1%. 250 billion has been supported by restructuring. And we have given, the banking sector has given them support by restructuring and rescheduling and allowing them to restart their businesses in carrying out these instructions by the regulators. And we have 52 million on legal action. Now this is something, again, the policymakers have to look at. The finance sector is today suffering because of the slow legal recovery process that we have. We know that in case of recourse of a distressed asset, it takes sometimes more than 4 to 5 years. So we have a sizable amount, 52 trillion marked under legal status. So again, if you analyze the distressed asset portfolio, which is about 12%, you will see 58% is being distributed among companies. Companies, which is 12%. Then 41% is with the individuals or the households. So if you see, the 4% of contracts accounts to 58% of 90-day past due. 4% of contracts, very little, accounts to 58% of 90-day past due. Again, same demographics that you saw in the lending distribution. Product-wise, 90 days past due. So if you see, loans obviously has the highest order. Then leasing had been affected. I would say, when you say leasing is affected, I'm sure the audience will see why it is being affected, because the imports on vehicles have been restricted. Now, in any developing or developed country, when you say leasing, you don't lease finance personal assets. You're encouraged, the banking sector is encouraged to finance income generating assets. But what do? Our lease portfolios, 98% consist of personal vehicles. So these are food for thought for the policymakers to see that the directions to be given and the obstacles to be cleared, to see that these products are properly driven for the benefit of the economy. So why the leasing is affected during this period was nothing else due to the restriction of vehicles imports to the country. We have seen overdrafts, rise in overdraft, nothing new. Usually overdrafts are given by the banks as quick remedies for financial requirements. However, we have seen overdrafts have gone up during this year. Sector-wise, 90-day due past, you will again see commercial sector showing the highest numbers. Then other sector basically consists of marginal trading, securitizations, then gold loans. The financial sector shows a considerable number, and households shows a considerable number. Agriculture shows the lowest in the sector. Same demographics can be seen in this chart, where financial sector, tourism sector is basically topping. So what are the future developments? I will just touch upon. We are developing a national SME-based score. So in order to develop this, we are not going to take the general data points that we have taken for the National Credit Report, where you and me have. We are in the 50% privileged lot. There is another 50% out there who are unable to access credit. So for them, we are developing a score taking into account non-traditional data. Non-traditional data are utilities, insurance, where they also be part of paying. And if they show discipline, if they show that the bills are paid on time, that will be captured and given them a reputational collateral for them to go to finance institutions and ask for a loan instead of having a credit profile. So we are developing this SME scores with the assistance of Finance Ministry and the few professional bodies. CRIB is involved heavily in this. Then cross-border data sharing is another aspect that we have embarked on, gone 70% of the journey, where when an investor comes or a foreigner comes, their credit profile can be brought to Sri Lanka, where a credit due diligence can be done. At the same time, a Sri Lankan goes overseas, from day one, he would be able to obtain a credit facility from an overseas country. So these are all positive factors. Launch of Secure Transaction Act. Now this is an act that had been on the cards for many years. We were fortunate that CRIB was in forefront to get this thing passed. Last year, this was passed. The authority was established. The technical assistance is given by CRIB to provide this registry. This will be a e-registry where movable assets, all movable assets will be registered. What are the three things that will come with the registration? Number one, there is legality on registering in the legal registry for movable assets. What is movable assets? Machinery, inventories, agricultural products, farm stock, intellectual property. So all these can be used as collateral when there is a proper legal structure. The legal structure is being given by this STR legislation. So CRIB is in the forefront of operationalizing this whole matter, and in February, we will be introducing the electronic registry. Development of commercial rating system. This is, we are working with Lanka Rating, where we will capture the income data of SMEs, blend it with credit information, and provide a credit score for corporates, where the income and the credit information, a blended score, will be given. So we have joined with Lanka Rating in carrying out this task. These all to improve the credit flow to the economy. Additionally, we are providing advanced portfolio management tools for the banking and financial sector in order to manage their portfolios with adequate information, adequate data. So these are the roadmap for 2026 that CRIB is engaged with. So I hope that my presentation enlightens you on matters that we are embarked on, and then the contribution that we as an organization do for the development of the economy. Thank you.
Thank you, Mr. Jayasundara, for that comprehensive presentation. We'll now move on to the Q&A segment and invite Tierney up onto the stage to facilitate this session.
Mr. Pushpike, thank you for joining Advocata's session today. And I think our first question is that, can reliance on traditional credit scores reinforce systemic biases, leaving certain demographics or regions underserved?
Yes, I think that is why I touched upon on non-traditional data. The traditional credit scores basically applies to individuals and organizations that carry a credit profile. So when I say credit profile, at some stage in their life cycle, they have been involved in formal finance institutions. So because of that, they have a credit profile. So the data points that we capture on a traditional credit score are the typical data points that we all know of. So in order to ignite the marginalized sector, we need to capture other types of data that they are familiar with. So these are models that are being practiced internationally, especially countries like Indonesia, Philippines, Malaysia. If you see, their microfinance sector is extremely strong. It is structured. The regulators are monitoring the micro and medium-term lending. So they have been offered credit scores, as well as they are in a formal structure. So because of this sector is being grown. So that is where we are also moving towards. We are going to capture non-traditional data, and moving out from the traditional scoring, we are going to develop a score that will basically capture the marginalized people's data and provide them credit.
Noted. One question from the Slido. Is there a way as an individual that he or she can provide their identification details and check their credit score on the CRIB website?
Definitely. We've been engaged for the last 2 years, educating people on this matter. Any person today, not only a person, any institute can go to www.crib.lk. There is a tab under my report. The product is branded as my report. So you can go to my report, you give your basic details. We do a cross-check immediately with DRP on the authenticity of the person, and we, within 24 hours, we get your credit report as well as the credit score and forward it to your email address.
Super. One other question is that from Slido, can CRIB score be seen as an incentive for better personal finance management and social standing in Sri Lanka in the future?
Definitely. This is where we are educating the general public mostly. In any other country, if you're going to a hospital, if you want to get yourself admitted, they will look or they will ask your credit score. So with the credit score, if your credit score is good, they will admit you and basically arrange the financial facilities for your medical requirements. So this is the level that other countries have gone. We as Sri Lankans, we talk about discipline, we talk about credit, financial discipline, but we are not that bothered about managing our profile, the credit profile. So this is where we have introduced this advanced credit score, where you would be able to get your report, you would be able to manage your credit score to see or to prove your bank that you're credit worthy. And today, it's not only the bank. Today, when you're going for a job, they ask your credit report. When you're going overseas, they ask your credit report. There are many embassies who basically ask the person to generate their credit report and come before approving the visa for that country. So there are many other areas where the credit score matters. But if you're blind about it, if you're unaware about it, definitely you will not be able to manage your finances, and you will be able to not properly prove your credit worthiness or credit standing to the financial sector.
Super. I will accommodate 2 questions from the audience. Be very quick and short. Please raise your hand. The gentleman in the middle, the blue t-shirt.
Given that credit is a big part of doing business in Sri Lanka, business to business, how can CRIB help companies collect on their invoices? For instance, if you're able to report invoices that are more than 90 days, effectively become a bad debt. Can that process be automated or streamlined to where it's an incentive for companies to pay their bills?
Yes. I think there are bureaus in the world who had gone to this advanced level where invoice data or transactional data is being captured. So in order to capture transactional data, we need to have a proper infrastructure. So now in the banking sector, we have the infrastructure to upload. Now we upload the data on monthly basis. We are going to upload it actually twice a month now. So we have the required infrastructure. E-commerce is something today that many countries are capturing, where through digital platforms, they basically identify the behaviors of customers and they make instant decisions using AI and machine learning. So through that, they provide digital financing. We have not gone to this infrastructure to date. But as CRIB, and I think the regulators, central bank, are really looking at these aspects where we should be able to capture these data through proper mechanisms. This is not something that it will take 2-3 years. If we basically put our brains into it, if we work together, guaranteed within a year, we would be able to facilitate this infrastructure.
Yes, now, thank you so much, Mr. Pushpike. We are in a small time crunch and we will have to move on to the next session. But dear audience, if you have any questions, please feel free to go to the orchid room. We will definitely accommodate and answer those questions at that point. And next, over to you, Tomali. We'll have Anna Trim next on stage, basically.
Thank you, Mr. Jayasundara and Tierney, for the Q&A session.